Okay, so Bismillah ar-Rahman ar-Rahim. Assalamu alaikum everybody. Thank you Brother Ali for this presentation, and I am honored today to be with you, with Mail and with all participants in this webinar entitled Discover What Make Islamic Finance Different from Conventional Finance. So just a quick presentation of my profile. Brother Ali presented my profile. So let's begin by an overview about Islamic finance, because we heard a lot about Islamic finance nowadays, and especially after the last financial and economic crisis in the United States of America. So is Islamic finance just related to this last financial crisis, financial and economic crisis? No, we heard about Islamic finance from 1975 or 1960 in the world, in Muslim world. So what will be the specificity of Islamic finance in comparison to conventional finance? Because maybe some researchers and some professionals also are talking about Islamic finance as the same as conventional finance, but just we changed some words, some nomination, and the subject is the same. So we will discover in this webinar main differences between Islamic finance and conventional finance. So the first question will be, why adding Islamic to finance? Because all we know, researcher and professional, we know that finance is well known. We know finance in banks, in insurance companies, in financial system in general. So the problem will be when adding Islamic to finance, what will be the consequence on what we know? Is there any rules related to finance, economy, trade in Islam? And if there are any rules related to finance and economy in Islam, can we apply these rules if they exist nowadays? All these questions will try to market rules such as supply and demand without ethics. And we can see that, for example, the well-known researcher in finance and economy, entitled Milton Friedman, he said that the social responsibility of business is just to increase its profits. So imagine that when we have a business in the market, we have supply and we have demand, just my objective is to increase my profit without any ethics, without any rules, without any guidelines. And that will make the difference between Islamic finance and conventional finance. When I will make a trade, when I will have a business in the market, it's true that I will look for profit, it's true, but in the same time I will look for profit with my principles, with my ethics. So what will be the sources of Islamic finance? Since the Islamic finance is different from conventional finance, it will be specific sources of Islamic finance. The first source of Islamic finance, of course, it will be the Holy Quran, which is the holy book of Muslim community. The second one will be the Sunnah, and the Sunnah is defined as teaching and tradition of the Prophet Muhammad ﷺ as transmitted by the relators of authentic tradition. But if we face any problem or we face any situation that we don't have the solution in the Holy Quran, the Holy Book, or the Sunnah, what will be the solution? The solution is that our religion, which is Islam and Sharia in fiqh al-mu'amalat especially, we can find the solution through ijma'. And ijma' is the third source of Islamic finance, which is the common opinion of religious scholars entitled fuqaha or ulama. So can everyone make this research in Islam or in fiqh al-mu'amalat? The answer is no. We must have certain qualifications. You must have well-known in fiqh al-mu'amalat and in finance and economy in order to give your opinion and to find the solution that is not faced in the Holy Quran and Sunnah. So in order to make a brief summary, in Islamic finance we have, first, we must apply the rules and the guidelines of the Holy Quran, and we will see some examples related to Quran when we find some related to finance and economy in the Holy Quran. We will also apply the Sunnah, and we'll see how the Prophet teached his companions to what make in finance and economy. And also the third source will be ijma', the common opinion of religious scholars. So the objectives of Islamic finance, briefly. When we have an Islamic banking and financial system, it exists to provide what? It exists to provide, it's true, to provide some financial product, to finance economy. All this is true, but in the same time we must understand that we must also provide variety of religiously acceptable financial services. We have many Muslim communities, either in Muslim countries, or also in non-Muslim countries such Europe or United States of America. We have many Muslims that are very rich person, they have a big wealth, and in the same time they are not operating with financial institutions because they think that this operation of conventional finance is not in accordance with their principles of Islam. That's why an Islamic banking and financial system will exist to provide this variety of financial product that will obey to Islam principles. In addition to this special function also the banking and financial institution, like all other aspects of Islamic society, they are expected to what? To contribute richly to the achievement of the major socio-economic goals of Islam. I will give some examples. Some example in Islam, we have some goals, some objectives in Islam. For example, the fairness. We must distribute the wealth with equity to all persons in the same degree. All these are goals and objectives of Islam. So the Islamic financial system will try and will operate and will work in order to achieve all these goals of Islam. So the most important of these are economic well-being. It's the first objective in Islamic finance. It's also the full employment. So the Islam and Islamic finance is encouraging to recruit and to have more employed person, and also higher rate of economic growth, because unfortunately when we have the last economic and financial crisis in the United States of America, we have more and many products, but in the same time we don't have true wealth. That's why in the final stage we have many failure of many financial institutions without any wealth. So one of the most important objectives of Islamic finance is the economic growth. Third one, which is the third objective of Islamic finance, is the socio-economic justice and also the equitable distribution of income and wealth. Unfortunately also in the capitalist system, in the current system, financial system, we have people that are very rich, and at the same time we find people that are very poor. So in Islam we can find rich person and person, but in the same time we must have other kind of charities, like for example what we see after that, the zakat. For example, in Islamic finance we can find non-profitable operation, and remind this word because it will be repeated when you study and when we are working in Islamic finance. You will hear that in conventional finance just we are looking for profit, but in conventional finance we are just looking for profit, but in Islamic finance also we are looking for profit, it's true, but also we are looking for charity and the distribution of income and wealth. There is another point, which is the stability in the value of money. We have nowadays in this all this environment, this external and internal environment, we have no stability of the value of the money. For example, the exchange rate of money are very different from one country to another. Also, we can find many countries that are now rich countries, and in other days, because of economic and financial problem and crisis, they are facing problem of the decrease of the value of their money. And also another objective of Islamic finance is the mobilization of and investment of saving for economic development, because it's true that we must have many banks, we must have many financial institutions, many insurance companies, but we must have a look to our economic development. Why we develop the economic development? Because generally in conventional banks or in conventional financial institutions in general, they are just making many operations and many products, and in the final stage we don't find anything. It's the case, for example, of future contracts. The future contracts like option swaps, etc., are contracts that are making on just a game of hazard without any counterparty of real economy. That's why in Islamic finance, when we finance real projects, we are contributing to the economic development of our country. So all these are objectives of Islamic finance. So maybe one question will be, what will be the difference between Islamic finance and Islamic economy? And is there any Islamic economy? The answer is yes. We have in Islam and in fiqh al-mu'amalat in general, we have Islamic economy. Islamic economy is more general than Islamic finance, because in Islamic economy we can find topics such as, for example, unemployment and employment. We can have, for example, the inflation rates. We can have all macroeconomic indicators in Islamic economy. But in the Islamic finance, it's a part of Islamic finance where we will find Islamic financial institutions such as bank and insurance company. Here an important remark. If we are talking about Islamic finance and as one of the objectives to have this equitable research between different people in the society, etc. So do we have some countries, and in these countries we have many Islamic financial institutions, and we have poor, and we have many persons that are not in development. So if we don't find, and remember this important remark, if we don't find these objectives realized in a region where Islamic financial institutions are operating, we can say that these institutions are not following correctly the guidelines of Islamic finance. Because if Islamic financial institutions are just working for profit, they will not follow the guidelines of Sharia and for Islamic finance in general. I will give just an example of Malaysia. Malaysia is a well-known country of Islamic finance. In Malaysia we have financed many projects in infrastructure, and the country is more and more developed through and due to Islamic finance modes of financing. And another example also of Turkey. In Turkey we have financed many projects of infrastructure, and the country is becoming more and more developed due to Islamic finance principles. So when we apply with true and correct manner the Islamic finance, you will be sure and certain that you will contribute to the development of your economy and for your country and for the whole Muslim countries in general. So what are the Islamic finance principles? And here we are discovering the differences between conventional finance principles and Islamic finance principles. The first principle, which is well known, and when you say Islamic finance, you will say directly the prohibition of interest or riba. But it's not the only principle of Islamic finance. We have the second one, which is the prohibition of maisar, which is the speculation. The speculation is prohibited in Islamic finance, and just you can have a look to the last economic and financial crisis of United States of America, of subprimes. It was a problem also of speculation, because all people are anticipated that they will increase their wealth through future contracts, and in final stage they don't find any of their wealth. So it's a kind of maisar or speculation which is prohibited directly in Islamic finance. Third principle of Islamic finance, and we'll see in details all these principles, is the prohibition of gharar. And when you hear this word of gharar, what is it? It's the uncertainty. But it's not just uncertainty, it's unreasonable uncertainty. I will give an example. All operations of banks are covered by uncertainty. There is a risk in all operations of banks. But what will be prohibited by Islamic finance is the unreasonable uncertainty, where we have two parts, and one part is more and more informed than the others. We are talking about gharar. For example, when you will have a taxi, you will take this taxi or a car or a bus, and in this bus you will have some target or some road, and you don't know what you will pay exactly after the distance that you will have. But it's an unreasonable uncertainty, because you know perhaps that you will pay 5 or 10 or one price. So it's an uncertainty which is reasonable. So the reasonable certainty is allowed by Islamic finance, but the unreasonable uncertainty is prohibited by Sharia and Islamic finance. We have fourth principle, which is financing in allowed activity, which is called halal. And we have some brands which is called in some, for example, Southeast Asia, for example, about products that are with brand halal, because we are insisting in this brand of halal, or in this financing in allowed activity, especially in countries where we find majority of Muslim communities, and this majority of Muslim communities should find the necessary activity which is in accordance with their religion and Sharia and Islam. That's why it's a big and important difference between Islamic and conventional finance, which is financing in allowed activity called halal. The final principle, and we have many principles in Islamic finance, is that the money is not an asset, because we'll see it in details. Money is used in Islam and in Islamic finance as a mean of exchange. And remember this word, money in Islam is a mean of exchange. I can buy and I can sell with money as a price, but I can't buy and sell money. The money hasn't any internal value. The value of the money is related to the operation that will be financed in the future. That's why it's called an obligation of tangible asset in each operation of the financial institution. I will give just an example. In conventional bank, they are just giving credit with interest, so they are obtaining money from their depositors. They are giving this money to other customers with interest, and the difference and the profit of the bank will be the difference between the interest that will be received and the interest that will be paid. So they are buying and selling money, which is not allowed in Islamic finance. In Islamic finance, I can buy this car by money. I can, for example, rent this, for example, building with money, but I can't buy and sell money. And here, an important and a very clear difference between the principle of Islamic finance and conventional finance. So let's return to riba, or to interest. How can we define riba? The significance of this Arabic word is increase or excess, but the legal definition of riba, what is it? It's the excess compensation without due consideration made conditional for either party to a contract. With a simplified manner, when we are talking about riba, it's an increase of one part, but the other part maybe they will made lose. So it's called riba. So where we can find riba in the sources of Islamic finance, we can find it, for as an example, in the Holy Quran. In this Holy Quran, we can find, for example, those who live riba will not expect one of the Satan has driven to madness by this touch. That is because they have said trade is but like riba, but Allah has permitted trade and forbidden riba. And we heard a lot nowadays about some persons who are talking about trade or murabaha and credit, and they are saying murabaha or trade is like riba. And Allah said trade is but like riba, but Allah has permitted trade and forbidden riba. So when you sell and buy money, it's forbidden, but when we sell and buy with money, it's permitted in Islamic finance. But the question will be, is the riba related only to Islam? The prohibition of riba, is it only related to Islam? The answer also is no. 4 of the world, and imagine that 4 of the world major religion in the world, like Judaism, Christianity, Hinduism, and Islam, having a following of more than 2/3 of the world population, have prohibited riba. And you can return, for example, to a nice conference made by Andre Martin in 2001 in Canada, and this professional in banking, Andre Martin, in 2001, has many sources about the prohibition of riba in these 4 major religions. So the prohibition of riba, remember this, it's not just related to Islam. It's a common principle between all other religions. So the question will be, why so many other people and many others, for example, religion, are not applying the principle of Islamic finance? The answer is very clear. Maybe in Muslim countries also, we are not following correctly our guidelines and our principles, and when we follow correctly and with good manner our guidelines and principles, we can find that the prohibition of riba is very clear in our religion. So how can we, riba is prohibited, that's true, but where we will find riba nowadays? There is a common opinion between Sharia scholarship, who call it fuqaha and ulama, that the interest as practiced nowadays is the riba prohibited. So the definition of riba is in accordance with the definition of interest which is applied nowadays by conventional banks. So financial system based in Islamic principles are dedicated to do what? The main objective of this financial system is to eliminate the payment and the receipt of interest in all forms. So when we find an institution which is not operating with the receipt and the payment of interest, it can be called an Islamic financial institution. It's this principle that makes Islamic banks and other financial institutions different in principle from their Western counterparts. So here the riba is the interest, but is riba related just to interest? The answer is no, because riba is not related only to money. And here a big confusion, because many professionals and many people that are working and operating in the finance domain, they are confusing, and that they are saying that riba is just related to interest, it's just related to money. But the answer is riba is also related to commodities. And we'll have this hadith, which is narrated by or reported by Ubayd ibn Samit. He said, the Messenger of Allah said, gold for gold, silver for silver, weight for weight, etc., equal for equal, and hand to hand. If these commodities differ, then you may as you wish, provided that the exchange is hand to hand. So in this hadith, the fuqaha and the Sharia scholarship are made many efforts to understand this hadith, and we can find that there are many rules issued from this hadith. So in brief manner, when we have similar commodities, so our two persons or two institutions, and will exchange similar commodities by there are two conditions in order to not to be considered as riba. The exchange must be hand by hand, which means in the same time and with the same quantity. As an example, when I will exchange a kilogram of gold, I must exchange now, which is the same time and with the same quantity, which is 1 kilogram of gold. And if I exchange, for example, 1 kilogram of gold now or after a certain period with 1 kilogram 100 gold, it will be called riba. So riba, it's not just related to money, it's also related to commodities. When we have different commodities with certain similarities, for example, I will exchange two things that are similar but are different. I will give an example. For example, exchange dollar with UL, for example. We have currencies. So what will be the condition? The exchange must be hand by hand, but not with the same value or quantity. And that's why the Islamic financial institution, when they are operating in the exchange market, they are using spot rate for currencies operation. So the forward spot, or the forward rate, sorry, for currency is not allowed in Islamic financial institutions according to this hadith. So when we have different commodities and with certain similarities like currencies, for example, the exchange must be in the same time, hand by hand, but it can be with different quantity or different value. And finally, when we have totally different commodities, we will exchange, for example, money with building or money with bus or car, etc. There are no restriction about quantity and time. We can exchange any. For example, I will buy or rent this car. For example, it's one car by, for example, 100 million. For example, so it's not the same quantity, and it can be not with the same time, like the deferred sale. So other principles or other than riba, there is also the prohibition in Islam of maisar, like the gambling and speculation, gharar, which I explained before, unreasonable uncertainty, the need to ensure that investment must be undertaken on the basis of halal, which is permitted activities, and the requirement to benefit society through the collection of zakat. And here when we are talking about zakat, we are talking about the non-profitable sector of Islamic finance. Believe me that in conventional finance they are just looking for profit, and when we are studying finance in our university, professional in conventional finance, they are taught non-profitable zakat, like charities, like for example waqf, and all these non-profitable sectors must be studied with more and more attention, because it's really a specificity. So when they are asking you what will be other principle or other difference between Islamic and conventional finance, you can say that the non-profitable sector is very specific, and it's a specificity of Islamic finance in comparison to conventional finance. And money is not considered as an asset, as I explained. It takes its value from the operation that was financed, which is tangible asset. So remember this sentence: we use money to buy and sell, but we don't sell and buy money, as I explained before. So who will control this conformity? As we can say that there is a lot of principles, and people must understand this of Islamic finance, of financial institution to this principle of Islamic finance. We'll find an important committee which is called Sharia board. So what will be this Sharia board? What will be the role of this Sharia board? So the role of Sharia board, in order to ensure that the practices and activities of Islamic financial institution do not contradict the Islamic ethics, Islamic banks or Islamic financial institutions in general are expected to establish religious supervisory board. So for example, I'm a businessman, I'm a wealthy person, and I want my project is to launch an Islamic bank or an Islamic financial institution. What will be the first step? The first step, since I am not specialized in Islamic finance, I will design and nominate a committee which is entitled Sharia Board Committee. So what will be the role of this Sharia Board Committee? It will be close to the shareholders, it will be close to all the management staff of this financial institution, and they will act as an independent Sharia auditors and advisors. And we insist here on independent. Why this committee must be independent? Because maybe sometimes this Sharia board will give some decision which are not which are contradictory with the decision of the shareholders. So we will take into consideration the decision of Sharia board or shareholders. The decision that will be made is the decision of Sharia board. So the Sharia board, their decisions are superior and more important than the decision of the shareholders, because in general shareholders are just looking for profit, and Sharia board is looking for the conformity of the operation to Sharia and Islamic finance. So, and are involved, this committee is involved in vetting, selection, inspection, all new contract, auditing existing contract, and approving new product developed by Sharia board. They are oversee the collection and distribution of zakat. So we have some financial institution in some country which, when we find at the final of each financial year, we must collect the zakat and we must distribute zakat. So who will be responsible to control all this operation related to zakat? It will be also the Sharia board. That's why I repeat it. When we want to launch an Islamic finance, the first step is to design and to nominate Sharia board responsible for this project from the beginning and during all the life of this financial institution. So when we find this committee, it's true and it's clear that we will find an additional element of governance which is quite different from that from a conventional financial institution, because in the corporate governance, in financial institution, in conventional financial institution, we will find in corporate governance, we'll find shareholders and we'll find managers. But in addition to these two parts of a financial institution, we'll find in Islamic financial institution one part and one committee entitled Sharia board. So it's quite different in the corporate governance system from Islamic to conventional system. So to briefly, the three alternatives in Sharia board, Mr. what are they? When they will audit and they will control the contract of this financial institution, maybe they can accept the contract. So when they accept, it's that the contract or the product that will be offered by this Islamic financial institution is in accordance and in conformity with Islamic finance principles. But maybe also they can refuse. So when they refuse this contract or this product, so they say that this product or this contract is not allowed by Sharia, is not in conformity with Islamic finance principles. And the third one is the modification. Maybe the Sharia board, they can find, for example, in this contract or this product, when we modify or when we change this paragraph or this sentence from this contract, maybe the product will be allowed by Sharia. So either they can accept, they can refuse, or they can change or modify the contract. So what will be the number of Sharia board? Sharia board can be minimum of 3 persons, and these 3 persons are specialized in فقه المعاملات, because we can find a person which is well qualified in Sharia in general, but a little idea in فقه المعاملات, in transaction Sharia. That's why the Sharia Board Committee must be of qualified person in transaction fiqh or fiqh al-muamalat. And they also, one of the most important criteria in choosing Sharia board is to choose persons that are also qualified in finance and economy in general, because any Islamic financial institution will operate in an environment, and in this environment we can find many financial institutions and many rules and guidelines. That's why they must have knowledge of both fiqh of transaction, fiqh al-muamalat, and also knowledge in finance and economy in general. So the other regulatory framework of Islamic financial institution is also totally different from the regulatory framework of conventional finance. We can find accounting and auditing organization for Islamic financial institution, which is located in Bahrain. So this organization will provide accounting standard, auditing standard, Sharia standard, and corporate governance standard. So all these standards are not obligatory for Islamic financial institutions, but they will help them in order to understand and to launch their activities with conformity to Islamic finance. So we can find also in Malaysia Islamic Financial Service Board, and this Islamic Financial Service Board will give an overview and an explanation of Islamic financial institution risks, and also it will provide what will they need as Islamic financial institution, their need on capital adequacy, because when we will face this problem, we can face Basel I and Basel II, which are norms and standard of capital adequacy related to conventional financial institution. But since we have different category of financial institutions called Islamic financial institutions, we must have their own capital adequacy guidelines and principles. We can find also rating agencies, and in rating agency, in order to evaluate the financial health of this financial institution, we can find Islamic rating agencies and also the conventional rating agencies in the world, like Moody's, Standard & Poor's, Fitch Rating, etc. They are giving periodically rating to this Islamic financial institution. So all of these are specific regulatory framework in order to understand this problematic of in order to understand the specificity of Islamic finance. So another important point, which is when we are looking about Islamic finance in the world, so we can find that the majority of Islamic financial institutions are in GCC countries by about 42%, and we will find that in Middle East it's 6%, and also in Asia, which is the southeast of Asia, we can find that there is about 25% of Islamic financial institutions in the world. So the most important market share of Islamic finance in the world is in GCC countries and in Asia. That's why it's a real opportunities to many businessmen or to any business development in this country to benefit from the advantages related to Islamic finance and to operate in these countries. We have also this table which is showing the geographical distribution of Islamic banks. So we are talking here about specific category of Islamic financial institution, which is Islamic banks. So we can find that from 1990 the total number of Islamic banks was about 18, and nowadays, or in 2010, the number is 102. So imagine the growth and the fast growth of the number of Islamic banks around the world. And also we can find that the most important number of Islamic banks is in Middle East also and in Asia. So it's not really exploded in Europe and in Africa, but it's the most important is in Middle East and Asia. So in order to finish this quick presentation about the difference between Islamic and conventional finance, we will find some difference between specific financial institution, which is the Islamic bank, because when we are saying Islamic financial institution, we can find Islamic bank, we can find Islamic insurance companies, we can find, for example, Islamic capital market product such as Islamic bonds, which are called sukuk nowadays. So just will be concentrated on the difference between an Islamic bank and a conventional bank. So the most important, as we know all, the most important revenue of conventional bank is interest. And the interest is interest that will be received from our customer and interest that will be paid to our depositor, and the difference is the profit of the bank. So in conventional bank we find unique and only one category, and imagine that it's only one category of contract in conventional bank, which is the credit with interest to all bank operations. So when we are looking for sale contract, we'll have credit with interest. When we are looking for launching a project or participating in project, it's also the credit with interest. Is it the same case in Islamic banks? The answer is no. In Islamic banks, we find a diversity of contracts according to the operation that will be financed. And he also reminds this sentence, it's a big and an important difference between Islamic finance and conventional finance. In conventional finance, we find only one contract in conventional bank, which is credit with interest, but in an Islamic bank, we'll find great and several number of contracts according to the operation. For example, we can divide this diversity of contracts into two important categories, which are sales contracts. Sales contract, for example, the murabaha, the ijara, the salam, etc. And all these products must be studied in details because, for example, we heard a lot about murabaha and credit with interest. It's the same thing, but we can find many differences from murabaha to credit with interest. It's like, for example, the murabaha is related to real commodities and credit with interest is related just to money. So murabaha is more and more financing the real economy than the credit with interest. Murabaha also is financed without any penalties of delay, so we are not paying at time. So the Islamic bank will say and will have an exam about your file and about your condition, and if they find that you are not able to pay, they will give you period, for example 2 months, 3 months in order to pay, and during all this period you will not pay more than what you will pay. So it's a big difference because in credit with interest, when you have a delay in the payment, you will pay more and more interest, and here it's a big difference. That's why, for example, in Malaysia context, we have Muslim and non-Muslim customers, and the study has shown, and we asked some non-Muslim customers in Malaysia, they are saying that they are operating with Islamic banks because in Islamic banks they are knowing from the beginning what they will pay, and it's not like in case of conventional bank. For example, another partnership contract, it's mudaraba and musharaka, for example. So in mudaraba and musharaka contract, it's a kind of partnership contract. So we can say that the diversity of contract, it's a sale and it's a partnership contract, and all these contracts like mudaraba and musharaka must be explained, and maybe we'll have the opportunity to have other webinars about this product, because the time of 35 or 40 minutes, it's not enough to present all aspects related to this product, because I prefer to begin this webinar in order to understand the specificity in general and the specificity of the framework of Islamic and conventional finance. So when we find this product, the profit of the bank in Islamic bank, of course, will depend on the category of contract made between the bank and the customer. So in banning riba, Islam seeks to establish society based upon fairness and justice, allowing to provide the lender with the fixed return irrespective of the outcome of the borrower venture. It's much fairer to have a sharing of the profit and losses. So when you have this relation of partnership between the Islamic bank and the customer, it's not like the relationship between conventional bank, which is borrower who will give money and will receive his interest independently with the result or the profit of the project that will be launched. But in Islamic bank, we are sharing profit and loss, and it's more fair and it's more justice in Islamic context. So in Islamic context, we have PLS, and remember this word, PLS is the profit and loss sharing. So in conventional context, we are talking about rate of interest, which is well known, the rate of interest, but in Islamic banks, we are talking about rate of return. So the rate of return, what is it? It will be the profit generated by the Islamic bank. It will be the profit generated by murabaha, by mudaraba, by musharaka, etc. So it will be, it's not a fixed one. It's a return which will depend on the operation that will be financed. So whereas Islam clearly forbids the former, which is the rate of interest, it's not only permit but rather encourage trade. So Islam is encouraging trade, is encouraging to make investment, is encouraging to make more profit, but in the same time you must share your profit and your losses with your partner. And here it's the relationship that will make the society more and more complementary when we will find this partnership between all parts of the society. So it's not like the first one or the first case of conventional bank. So in the interest-free system, by adhering to Muslim principles, people are able to earn a return on their money only by subjecting themselves to the risk involved in profit sharing. So I can't close my hand and I say, I have this amount of money, I will give credit and I will obtain interest. In Islamic principles and Islamic guidelines, you must share all your efforts and you involve it on your act of expected to undertake operation only on the basis of profit and lose sharing, PLS. It's like a partnership. When we are losing, we will lose together, and when we will have a profit, we will have this profit also together. And this is the very important difference between partnership in Islamic finance and also the credit with interest with conventional finance. So I think it's time. So in order to conclude, Islamic finance is presenting many differences, as we say, with conventional finance. It's also science that must be learned and studied, because some people are saying about Islamic finance, it's not a science. Islamic finance can be learned in only one day or in only one seminar or only one conference. It's not true. So Islamic finance is a science that must be learned and studied for long years and for long seminars and workshops. Maybe it will be the opportunity with Mail, inshallah, to organize some workshop or some seminars, maybe in Saudi Arabia or in other parts, in order to study more and to learn more about all these aspects related to Islamic finance. So also it can be solution to many problems related to the current financial system, because really we are suffering from the consequences, from the bad consequences of the financial and economic crisis. That's why when we apply with the right manner the Islamic finance, maybe we will solve many problems related to the current financial system. And how can we apply with the right manner the Islamic finance? It will be through more and more partnership rather than sales financial product, because we can be an Islamic bank and will be concentrated just on murabaha, buying and selling, etc. But it will be true manner of applying Islamic finance principles through the partnership. For example, this person needs money in order to launch his own project. We can finance it through mudaraba. This person has money but not enough money to launch his project, so we will make musharaka, which is a partnership between the Islamic bank and this person, etc. All these forms of partnership will contribute to have more and more development of our Muslim and non-Muslim countries, and it will contribute to the health and to the development of the entire whole world. So I thank you for your attention, and for any inquiries and or opportunity, you can contact me. You have my mail and my mobile, and thank you very much.
Well, thank you very much, Brother Bashir, for a very comprehensive presentation, and I understand the constraint of the time duration. As you mentioned, we are also in the midst of finalizing a program designed for a flagship program on high-performance Islamic finance, which will be announced on our website, inshallah, very soon. Folks, we are now open for question and answers. If you have questions, you can either raise your hand, and I'll be happy to give you an opportunity to speak to Brother Bashir directly, or you could put your questions in the question box and I'll read them over on your behalf. Let me go to the question box. There are questions already posted. There is one question interesting. Brother, what is the misperception that is causing people to consider current practices of Islamic banking at par with the conventional banking, as they feel it is only the documentation where it is making it unique, but in reality back-end banking operational methodologies are more or less the same?
So
what is the misperception basically which is causing this among the consumers towards Islamic banking, as they feel it is pretty much the back-end operations are same as the conventional banking?
So when we have Islamic finance, we are talking about two parts or two categories. The first part is the theoretical part of Islamic finance, theory in general, which is documentation, papers, articles, etc. And we have the practical aspect of Islamic finance, which is with the Islamic finance such applied nowadays by Islamic financial institution. So when some people are saying that Islamic finance is very close to conventional finance, I understand it very well, because maybe sometimes you can find an important difference between what we say in theory and what we apply in reality from Islamic financial institution. And why Islamic financial institutions are operating with a manner which is so close to conventional finance, it's very clear, because the total environment, the external environment, is operating with interest mechanism, with conventional mechanism from many years ago. But the Islamic finance industry is new in the world. As I say in the beginning, we find that the first Islamic bank was in 1975, which is the Islamic Development Bank in Saudi Arabia, and after that the Dubai Islamic Bank in the same year of 1975. So when we are talking about a bank which is launched in 1975, and we have many conventional banks that are operating since many years ago before, so it's a big difference between the experience of conventional bank and the experience of Islamic banks. That's why the experience, in my opinion, I think that Islamic financial institutions, it's a new experience, it's true. Maybe there are many problems, it's true. Maybe there are also many aspects of Islamic finance that are not so clear to all consumers or to all customers, etc. But we can find by the year and by the days and by the effort, especially of all interested people in Islamic finance, to ameliorate this perception to Islamic finance and to give more and more comprehensive aspect to this industry. So we must work together, researchers and professionals and all interested people and interested persons in this field, in order to ameliorate the image of Islamic finance. Because as I said before, for example, we have many hadith, many verses in the Holy Quran, we have many books, we have many rules and guidelines of Islamic finance. That's why attention must be given in order to understand more and more all the aspects related to Islamic finance and to apply it, and that's it, the most important, to apply these principles and these guidelines correctly in the reality. As an example, for when we find many Islamic financial institutions that are declared and they are saying that they are Islamic, and when we go to this Islamic financial institution, we find some operations that are not in conformity totally with Islamic finance, it will be a problem. There is another problem also, maybe in our Muslim countries, we don't have the same scholarship, religious scholarship. For example, when we can interpret some rules of Islamic finance, it will be interpreted differently from one country to another according to the Sharia scholarship. It's also another problem, because we can find an operation which is allowed in one Muslim country and prohibited in another Muslim country. So all these problems must be treated, and with the efforts of each other and with the complementarity of all persons that are operating in this domain, we can find better future for this industry.
Oh, okay, thank you very much. Now we have some callers who have raised their hands, so let me go to Brother Manzar Alam. You raised your hand, sir. Could you please introduce yourself, where you're calling from, and ask the question? Brother Manzar Alam, can you hear us?
Yeah. Can you hear me?
Yes, we can hear you, brother. Could you please introduce where you're calling from, and please ask the question?
I'm calling from Pakistan.
Yes.
And I want to know that most of the perception, as you already asked, but all the banks are their internal banking is related to the state bank of that country's rules and regulations, which ultimately is either associated with the World Bank, IMF, or all Asian Development Bank, or with the conventional banking. So ultimately the main source will remain as the conventional, and on front page we remain make the nameplate as Islamic Bank. How does it is going to make the difference?
very much. Brother Bashir, did you understand?
Could you repeat, Brother Ali, the question, please?
Okay, I think
The
Brother
last,
Manzar also posted this, so I'll read it over. I think, Brother Manzar, let me read over what you have also posted, the same question, so it will be clear to him. The brother was calling from Pakistan, and he asked, Islamic banks reinvest money as per the state bank policies or central bank policies with respect to the instructions and laws defined by them, which is not Islamic. So mixing systems does not pollute the money or makes it un-Islamic?
So it's a good question and an important question about the relationship between Islamic financial institution or Islamic bank and the central bank. So we know all that the central bank is the most important organization that will control all the financial and monetary system in a country. So when we have a central bank in a country which is not totally Islamic finance, because we find many countries that are totally Islamic. For example, it's the case of Sudan, for example, or the case of Iran. In these countries like Iran or Sudan, for example, the whole system, it's an Islamic financial system. So the central bank also, it's an Islamic, if we can call it, Islamic central bank. So this Islamic central bank will have many operations with the Islamic financial institutions that are operating in the same financial market and system, and all these operations will be allowed by Sharia, since the central bank is an Islamic central bank. So there is another category of countries. These other categories of countries are called dual financial system, which is a financial system where we find that conventional banks are operating together with Islamic banks. And the problem, take for example. So what will be the solution? The solution is made as an example by the country of Malaysia. So in Malaysia, in Southeast of Asia, we have in the central bank a department which is totally dedicated to Islamic finance. So when, for example, an Islamic bank in Malaysia is facing a problem of liquidity, it will go to the central bank, and the central bank will have some operations which are allowed by Sharia. I will give an example. I am an Islamic bank, and I need money in order to finance and to reinvest my project and to finance my the profit that I will distribute to my depositors, and I will go to the central bank. So this central bank can give me, for example, an amount of money under the principle of Qard Hasan. The Qard Hasan, which what is it? Is credit without interest. So when we will give this credit without interest, the central bank will give the money and will return and will reimburse this amount of money with the same principle of credit without interest, which is loan-free interest, which is called Qard Hasan. Another method of working between the central bank and an Islamic bank. For example, they can give money through Mudaraba principle. So Mudaraba principle, for example, the central bank will invest this amount of money in a project that will be financed by the Islamic bank, and the profit that will be generated by this project will be distributed by and will be shared also between the central bank and the Islamic bank. So all this aspect is related to central bank when we will have a department dedicated to Islamic finance. The third category is when we find an Islamic bank working and operating in a country, and the central bank of this country is not presenting any department or with the central bank. They will, for example, obtain this money, but they will send this money without any interest. And here it's a problem. It's a real problem when we make a deposit or reserve with your central bank without receiving any profit. So when we would like to resolve this problem and find a solution to this problem, the most important and the most suitable solution to this problem is to have a department, as I repeat, dedicated to Islamic finance in the central bank in order to make all operation in accordance with Islamic law or with Sharia.
Very much. Let me move to the next caller. We have Brother Abdul Aziz. Sir, you have raised your hand. I've just unmuted your mic. Can you hear us? Brother Abdul Aziz, can you hear us? Okay, let me move to the next caller. We have Brother Junaid. Brother Junaid, can you hear us?
Yeah. Assalamu alaikum.
Wa alaikum assalam. Could you please ask the question?
Yeah, I am just asking a very practical question what I am facing every now and then. Actually, we are importing, suppose paper from outside, and we have murabaha agreement with our local bank. When we purchase goods, receive documents, we submit the documents for refinancing of this purchase to our bank. They give us one document, first deal and then other deal, and I see on those documents the words written for some metals like description of goods, one of the following items: copper, zinc, lead, aluminium. It is a purchase deed made from our side to bank, and then another deed comes from bank side as a sales contract mentioning one of these items, aluminium or something. Just mentioning the same amounts with the profit which comes due after some time, after 3 months or 6 months, in 7 months as per the deal. But I never see these items. I suspect that these items mentioned in these deals are just fake items. And what is the reason of mentioning these items? Just I want to know. Am I clear?
Yes. Okay.
Yes, Brother Bashir.
Okay. Okay, thank you. So we are talking about murabaha contract. So in murabaha contract, here I haven't present in details murabaha because maybe we will have other presentation about murabaha in details. But in murabaha in general, we have many steps, we have many documents, it's true. So the first step in murabaha contract, so you must with your bank design what you will have building or car. So this is, and after that, after buying this commodity with the price in accordance with the customer, they will sell again in a second contract this same commodity to the final customer, which is called murabaha contract, and we will find also the price plus the profit of the bank. So when we have the mention of, like you say, the mention of some commodities in a contract, first, in a murabaha contract, one of the most important conditions is that the murabaha contract, we can't find many contracts in one contract. If you understand me, in Sharia in general or in Islamic finance, when we will have many operations, it's not allowed. It's prohibited to make many contracts in the same contract. So, for example, I will the building A, B or C, I must have other contracts, other murabaha contract. So here we must mention and we must specify, and it's my opinion of course, we must specify in the contract what will be the object of the murabaha, what will be the specified commodity of this murabaha contract. Second, another point. So when we will find that, for example, you are operating, your institution or your company is operating with an Islamic bank through murabaha, and you will share this profit of this murabaha. In Islamic bank, I remember an example in Kuwait with the well-known Islamic bank in Kuwait. So some customers are asking if the bank, the Islamic bank, is really making this operation of murabaha in all over the world. So that's why in order to have an expect real contract in France or United States of America, and they will say if this commodity is really existing. So, and I find that this commodity is really existing. That's why be sure and be certain that the Islamic bank, when making murabaha contract, they are sure and they are certain to make with specified commodity, and it's real. real commodity which is existing. Because as I said before in this presentation, if you remember, brother, in some of Islamic finance principles is that money is not an asset. We must finance tangible assets. We must finance real assets. That's why this asset must be real in order to finance real economy by this operation. So remind these two answers. The first one, each product must have a separated murabaha contract, and also when we find a murabaha contract related to specified product or commodity, must be sure and certain that there is many committees and many control and many persons that are verifying if these commodities are really existing or not.
Thank you very much, Brother Junaid, for asking this question. Let me move to the question box. We have a question from Jamil Banu. The question is, how can we as bank customers validate whether Islamic banks are based on true Islamic finance principles and which are not?
Sorry, could you repeat, please, brother?
The question is, as bank customers, how can we validate which are true Islamic finance, which are running on true Islamic finance principles and which are not?
So it's a question about how the Islamic financial institutions are practicing Islamic finance. Is it really an Islamic financial institution or not? That's it.
Yeah.
Okay. So as a bank customer, I will be sure and certain, as I say, it's the answer about my question: who will control the conformity of Islamic foundation of an Islamic financial institution? It will be the Sharia board. So it's the responsibility of this committee to give their opinion if this contract or this product are in conformity or not with Sharia and Islamic finance principles. It's an important question because, like all the majority of customers in the world, or in Muslim countries in specifically, they don't know or they don't present a very important idea about Islamic finance or about fiqh al-muamalat or transaction fiqh in general. That's why these customers will not leave their work and will control the Islamic bank. This role of control will be the role of the Sharia board. And I will give an example of how this Sharia board are making their work or their job. This Sharia board, like in all financial institution, conventional institution or Islamic, will find external audit and internal audit. So in Sharia also you can find external Sharia auditors and internal Sharia auditors. So what will be the role of both of these categories? Internal Sharia auditors are working always with this Islamic financial institution. They are examining and they are having a look to the contract and to the product always of the bank. But the external Sharia auditor will be at the end of the financial year. They will see the report of the internal financial or the internal Sharia auditor, and they will say if there is a conformity of the operations of this Islamic financial institution. So, for example, when we will have a look to the annual report, and I advise all customers that want to operate with Islamic financial institution to have a look to the annual reports of this Islamic financial institution, which are published at the end of each financial year, in order to know and to find in this annual report the annual report of Sharia board. So maybe by some research in internet, for example, you type the website of an Islamic financial institution, you type annual report, you will find included in this annual report Sharia auditor report. So in this report you must read carefully all the aspects related to this report, and if you find that the Sharia auditor or the Sharia committee or Sharia board is decided that this Islamic financial institution is not following the principles and guidelines of Islamic finance, you will be not encouraged to operate with this Islamic financial institution. And in contrast, when we find positive image, when we find positive answer, when we find positive decision about the Sharia board report that there is conformity of all operation of the bank, you will be encouraged to operate with this Islamic financial institution. So briefly, and as a conclusion to this question, you have the Sharia board, which is a committee that will control all the conformity operation of Islamic financial institution, and in the same customers that are very must some point of Islamic finance, because when we don't know anything about Islamic finance, it's true that you can find the reality which is not in conformity with theory. That's why you must learn and study more about Islamic finance, and also have a look to the experiences of foreign and domestic experiences of Islamic finance in the world, in order to find appropriate answer to a question, and in order to find who apply with a true manner the guidelines of Islamic finance, and who apply with wrong and bad manner the guidelines of Islamic finance in reality.
So we are really short of time. However, we have 2 more questions. So, brother, I would read those questions. Would appreciate short answers. One of the questions from brother Abdulaziz. He wrote, "I'm particularly worried about the ethical part practiced in the industry. Most of those sales agents and other employees of IFIs hardly know anything about the Islamic aspect of the product and deal with the customers in conventional ways."
Sorry, brother. There was a wet connection. Could you repeat, please?
Yeah, I think we are having little technical issues with an audio. People are also saying that there are hitches. But the question is, again, I'll repeat, from Brother Abdulaziz, who said, "I'm worried about the ethical part practiced in the industry. Most of the sales agents and other employees of IFIs hardly know anything about the Islamic aspect of the product, and they deal with the customers in conventional ways. Doesn't that send a bad image of IFIs and IF in general, Islamic finance in general?" Please, brother, short answer.
Yes, it's another question related to the practice of Islamic finance, and I understand why many of our participants are asking about this practice aspect, because everything is good in theory, but you can find, for people that are employed in conventional financial institution, and in the same time they will work and they will operate with Islamic financial institution. It will be a problem, because they are not, maybe they don't understand clearly what will be the specificity of Islamic finance. Maybe they will use the same words like in conventional finance. For example, a person who is working in an Islamic bank must not say at all credit. It's just the credit without interest, which is Qard Hasan, but all other products are financing modes. It's an example. For example, a person who is working in an Islamic bank must never say interest. They must say profit, because it's the reality. An Islamic bank is not operating with interest, they are operating with profit. So if we find staff who is working previously in conventional financial and Islamic finance in general, in a training period to their staff, they are making always some seminars, some conference to their employees, to their staff, in order to update their knowledge from conventional finance to Islamic finance. But here, an important remark: we can be very good in Islamic finance, but in the same time we must have a knowledge about conventional finance. We can't understand the difference between Islamic and conventional finance without having a look and having an understood and knowledge of conventional finance. So it's really a good question, and it's related to a problem faced by Islamic financial institutions related to their capital, their human capital, the persons that are working in Islamic financial institutions.
Another question from Brother Firoz Khan. The question is, how does fiqh affect the way Islamic finance operates between the different countries? For example, the Islamic finance banks in Malaysia, in order to match their product offerings with conventional banks, are offering products such as futures, which do not appear to be Islamic, whereas the banks in the Middle East have stayed away from such products.
Mm-hmm. So here it's a problem related, as I say, to the diversity of how can I interpret the Islamic finance principles and guidelines. We have many schools of scholarship, we have many ideas. For example, we can't say, as an example, we can't say that the same Islamic finance practiced in Iran, for example, is the same practiced in another country, in Malaysia, for example, because one is the Sunnite, the Shiite school. It's not the same, and maybe also in some Muslim countries it's not. I can't interpret with the same manner. For example, as I say, the Sharia board is the committee which is responsible for the control institution. We can different that are providing different opinions and different advices that will create a problem. That's why we can find, and I said this remark in my presentation, we can find a product, an Islamic financial product, which is allowed in one country and prohibited in another country. So what I must do as a customer or as a person who will work with and operate with this Islamic bank, the answer is, and the solution will be, I can operate with the principle of Islamic finance of my country, because when we are belonging to the same country, it's very important and very, very important to unify and to have the same opinion in the same country. Imagine that we are in the same country and one is saying it's prohibited and the other is saying it's not, it's allowed. It will create a problem and a conflict of interest between people that are belonging to the same country. So at least, and let's say at least, if we don't have this group, all Muslim countries through the same principles of Islamic finance, we must have at least in each country the same principles that are applied.
Well, thank you very much. That really brings us towards the end of the webinar. I would like to thank you, Brother Bashir Abulaid, for your very interesting and very intriguing presentation. And thank you all of those who participated in this webinar and made it an interactive experience for all of us with your questions. Before I conclude, Brother Bashir, any concluding remarks would you like to give?
Okay, so I would like to thank you, especially Brother Ali, for your patience, for your good organization for this webinar. And through you, I want to thank all my staff for giving this opportunity to present this. So it's the first distance, and also I hope that we organize many other webinars and why not many other seminars and workshops in with Mile in, for example, Saudi Arabia or in other country, or master courses in this domain. And I'm ready to any contribution or to any opportunity of partnership with you in the future. And thank you.
Indeed, I think it's going to be we're going to try to sustain this relationship and to keep you engaged with us, as well as all those who have attended it. So please stay tuned. Lots of you have asked about the recording of this webinar, which will be available on our community after we edit and produce it. It's community.mile.org. So please stay tuned to our Mile community of practices to be able to watch the recorded version of this webinar and lots of other webinars that we have uploaded in the archive section. And you can easily download the soft copy of the presentation from the community. This particular webinar's recorded version will be available in the archives in the next couple of days. So once again, thank you all of those who have attended this webinar, and once again, especially thanks to Brother Muhammad Bashir Al-Bayt for your time and for sharing this valuable information. Well, I'm going to conclude this webinar and you all will be automatically dismissed out.